Well, the issue of oil thefts is a very important one that requires deliberate effort by the government. And thank God we now have portfolios attached to the ministers, even though we did not see that of the Minister of Petroleum. But of course, we saw that the ministry has been split into two. So we have the ministry in charge of gas now, and then we have Minister of State, you know, for petroleum resources. Perhaps the president, which has been the practice for how many administrations now, at least the last 3 administrations, we've seen the president act as the Minister of Petroleum Resources. Perhaps that's what President Tinubu intends to do, but we are yet to get a confirmation on that. And still connected to that, yesterday, I think it came in late, the story that the NNPCL has secured $3 billion oil for cash loan, and it's all in the bid to help, and they're doing this on behalf of the federal government. That's the report that we got yesterday. And they're doing this to stabilize the naira and help buffer some of the price hike or threats to price hike when it comes to petrol. Well, let's try to understand more about this. I know that the NNPCL has been sharing on Twitter some tips of what we should know or understand about this deal. But let's try to put that in words and a whole lot more with partner oil and gas with Olaniwo Ajayi. Mr. Chukwemeka Osuji joins us from England. Mr. Osuji, thank you for your time and good morning.
Good morning. Thank you very much.
Yeah. So I believe one of the things that come out from this is that it's a $3 billion loan, and it's going to be paid for with crude, unlike the crude swap we used to have, which is that they will give crude and get refined products from it. But in this case, they're giving crude worth 3 billion naira, and we understand this is going to be given in tranches. So help us to understand some of the other implications. I know they say it's to stabilize the naira, but I mean, the man out there might just ask how. So help us to understand some of these technicalities about this 3 billion naira loan.
Thank you very much. What I'll do is I'll break it up into 2 bits very quickly. In the first, I'll speak about how this works based on the oil industry practice. And then I'll then speak about what the implications are for the Forex, which really is the objective. So in the oil sector, this practice is not strange, it's not alien. Typically, oil producers may require funding for either immediate developmental needs or future developmental needs. And they may decide not to use their own funding or to even take cash from elsewhere, but to secure funding for that they need for the operations. When they do so, there are different models. They can either pay back from their cash flow or they can pay back from production from the assets. Now, as is the case in this instance, they can also pay back from future production from the assets. It could either be part of their profit oil or royalty oil. And in this case, I think royalty oil was mentioned as part of the elements that will be involved in this deal. So it's not a strange concept. And like I said again, so it's typical. You will secure loans to be received immediately or in tranches. And then you will then pledge or securitize production from new assets to repay those loans in the future. Now, as to this application, we all aware of what's going on in the Forex, in sort of the sector, and how government is sort of struggling to support the CBN. A week or so ago, when the CBN report came out about our reserves, there was a bit of murmurs in this sector, and we saw the impact on the market. So I think the essence of this move, amongst other things, is to get additional revenue that the government can then use to support the CBN and then support our reserves. When we support our reserves, we will send positive signals to the economy and the sector generally. Then in addition to that, there will then be additional cash flow. So I think that's the linkage between the production on the part of NNPCL, securitizing its reserves for production, as well as getting immediate cash flow to the government.
How long can we expect? Because it's supposed to stabilize the naira, and all of that. How long can we expect before we start seeing the impacts of this?
Okay, 2 things that you notice will immediately happen is when firm definitive documents are signed, the market begins to react immediately. On the back of this news, I'm sure if you've been monitoring, particularly the parallel markets rebounded since, I think, Wednesday. And I think that we are looking at a positive note again today, just on the back of these announcements. Now, in terms of the funds coming in, we are aware they've signed the term sheets and commitment letters. It might not be the case that they will fund or disburse monies to NNPCL on the back of a term sheet. There may be more definitive agreements signed, in which instance that means that the money is not coming immediately, because it might not be the case that they're disbursing on the back of the term sheets. Whatever the case, whenever they disburse, the funds will come in, and immediately we begin to think that the markets will begin to react positively. Again, as I said, on the back of the news alone, the markets will take signaling and also react positively.
Yeah,
so I think we'll see a little bit of a stop in the downward spiral of the value of the Naira.
Yeah, you're correct about that, because yesterday in the parallel markets, the Naira gained was back to 800, about 890, left the 900 and 915 and all of that it was. So I guess the news has already started doing something. But of course, over time, if we do not see feel it, then, it will be back to normal, which is what happens in markets. But there's the other side, the fear that this will be on the balance sheet of the NNPCL, and NNPCL is supposed to go private. This may scare away investors, from buying into a company that maybe has so much debt burden.
Oh, well, there are two things. First and foremost, I think to some extent, we need to begin to trust those that are managing certain organizations to give them the facts that are available to them, some of which we may be unaware, take what is likely to be the best business decisions in the interest of the company at the time. And again, as I said at the beginning, financing through these models is not very alien. And all you're pretty much doing is you're securing funding on the back of future production. To the extent to which you have enough reserves to produce, then it's pretty much a plug and play. As long as you produce, you can pay back. It should not be a problem. And then in the future, you can always refinance these facilities, which is source for other avenues to sort of repay or reduce or restructure the financing. So there's a whole lot of flexibility that can be done just before or at the time at which the company decides to float some of its shares to the market.
But do you see this as a long-term? Will this give us, is it just a buffer for a short term, or is it a long-term solution?
Speaking personally, I think it's a buffer for the short term, or I would just call it one of the many measures that might be required. I think ultimately, as I've said in various sort of fora, it's really about the value of the Naira. The value of the Naira is tied to the value of the economy, whether you're producing or not, amongst other things. In addition to that, in terms of your balance of trade, to the extent to which Nigeria is not producing enough or exporting enough, and most of your trades are settled in dollars and not in Naira, the Naira will continue to be weak. So this is just one of the measures. Ultimately, we need to do more to strengthen the economy generally, and more importantly, manufacturing and production needs to ramp up significantly. Then we begin to see the value.
All right, thank you so much for your time, Mr. Chukwemeka Osuji, partner, oil and gas, Olaniwo Ajayi. Thank you for your time this morning.
Thank you very much. Thanks for having me.
We'll certainly have more to say on this in the commodities segment, but we'll take a break and we'll be back for that.